So welcome back in the next lecture of public finance. Today we are going to discuss GST, that is the goods and the services tax. In the last lecture we discussed about the VAT, the value added tax, or one component of VAT, how India implemented that VAT. It was through the modified VAT and through the SAN VAT. GST is also a type of VAT only. It is also a value added tax, but GST it is a one step ahead of the SAN VAT. It is a one step ahead of the existing, the fragmented VAT system that we have. At state we have the state level VAT, at union we have the central VAT. So it is going to unify, the GST is going to unify or amalgamate states indirect taxes as well as the union government indirect taxes. So the majority of the indirect taxes, they will be amalgamated when the GST will be implemented in India. The GST bill is still pending in the parliament. It has been passed by the Lok Sabha, but still, because the present government is having not having majority in Rajya Sabha, so it is not being passed from by the Rajya Sabha. Anyways, first let's discuss what is the need of GST, why we need GST. So the need of GST will be, what is the negative of SAN VAT or the state level VAT? It is one and the same thing. If one, suppose the precursor of anything is having some negatives, so to remove these negatives you need a second concept. So the need of GST was felt because there was some negatives in the existing system, and earlier the existing system means at union government we had SAN VAT, at states we had the state level VAT. So suppose I'm giving you one example. You are producing one finished good. What was the tax structure earlier? So the SAN VAT on that product was 10 rupees. Suppose the value addition across the different stages for producing this finished good, whatever that good is, it was 10 rupees, and the price of the finished good, the raw material and all this thing, it was 100 rupees. So the market price was 110 rupees. Now this is known as the production stage. So this tax will be collected by the union government. Once something is produced, now it will be distributed. So the selling point of view, the sale of that thing. So now suppose there are 2-3 distributors, distributor 1, distributor 2, distributor 3, retailers and all this thing. The chain is very big. So the cost price of this particular finished good for distributor 1 is 110 rupees. And at state we have the state level VAT, which includes the sales tax. So VAT, for example, 10%. So this 10% will be levied on full 110 rupees. Although in this 110 rupees, this 10 rupee is a tax. It means states or the present system is still having the problem of tax on tax. Why it is tax on tax again? Because the state government is levying VAT not on this 100 rupees, not on this base, but the final base. And the final base is, what is the cost price, the price at which it is being sold. So it is 110 rupees. So on this 10 rupees, again there is tax on tax. So the one extra rupee, ideally it should be 120. 10 rupees divided by union government, and 10% of 100, which is 10. So 120 should be the selling price. But because there is a double taxation mechanism taking place, because of the cascading of taxation happening, first chain, second chain, third chain, then again this 10 rupees will be taxed here also. This 10 rupee will be taxed here also, and it will be taxed across the full chain. This is known as cascading of taxes, and this is known as double taxation. Here also double taxation, double taxation, double taxation. So unless and until the base is common, or the body which is whatever the institution, state or union, whoever is levying the tax is the common, and unless and until these two things will be resolved, there will be tax on tax which is going to take place. I hope this thing is clear. Why in earlier system, although at the union level there was no tax on tax because we had SAN VAT for majority of the sectors, at state also we had that VAT system, so there was no tax on tax within the state, but across the chain, when the finished good, when union is levying some tax and then it goes to the state, and again from one state to second state, interstate trade is going to take place. For all these things, still there is tax on tax or the double taxation mechanism. So this is one of the major negative, what this was the need was felt to implement GST. So first negative of the SAN VAT or the state VAT system was that input tax credit was not available for all the items. It is like, suppose you are producing something, and for this production you have to do some advertisement, then some transportation cost is involved, then some communication cost is involved, you have to give some phone calls. Now whenever suppose you are using some mobile, and on this mobile you have to pay service tax, and all these things plus raw material etc. and all, that will be your input cost, because to sell this raw material or the finished good you have to give some call, transportation, advertisement and all these things. And on this transportation you are already paying the tax, road tax etc. On this communication also you are paying the tax, service tax etc. Advertisement also you are paying the tax. But when you will get the refund, the input tax credit, that input tax credit will only be available for this raw material thing. No input tax credit will be given for this communication expenditure. Here you are paying service tax, finally again you have to pay the tax on the final item. So the input tax credit, the present system is fragmented, different entities. But once GST will come, so GST is not going to give you the return, the input tax credit on the manufacturing. This is the manufacturing. So because you are manufacturing only this item, so only for this item you will get input tax credit. So either manufacturing or the sale. But this manufacturing and sale, this system will be replaced by supply. So whatever you are supplying, if you are supplying the goods or you are supplying the services, you will get the input tax credit. So when GST will come, these tax and all will be counted in your input cost. So this is one positive thing, or this is one of the need of GST. Then tax on tax. The present system we discussed through this example that still there is a tax on tax. The cascading effect is still taking place, and whenever there will be cascading effect, that is going to increase the prices of our commodities. And when the prices of our commodities that will increase, so our items, they will become non-competitive in the domestic market, as well as their competitiveness in the international market is going to decrease, because their prices are high. And why their prices are high? One of the reason is double taxation, cascading of taxes. So that is one problem. Then no uniform rate is there, because states are levying VAT. Now no uniform rate. The best example is, suppose you want to register your vehicle in one state and you want to register your vehicle in some other state. The VAT that you have to give is different. Suppose you are there in, take the example of Haryana and Delhi. So the value of VAT in Haryana and Delhi is different. So the registration cost, final registration cost of registering a vehicle in Haryana and Delhi will be different. So maybe somebody wants to register in Haryana if the registration cost is less. So there is no uniform rate as well as the documents that are required. So suppose again from Maharashtra, somebody wants to go to Bihar, so they will cross MP, then they will cross UP if they are going to this way, or this Jharkhand, through Jharkhand also they can go. So 2-3 states you have to traverse during your journey to Bihar, or the final selling of the products to the Bihar. Now when you reach MP, at this point on the border, you have to pay some tax that will be levied by the MP government. So different documents will be required. It's not like a uniform document is required. Now suppose you have already prepared the documents. When you will reach MP, UP, again you have to show a set of documents. Then when you reach Bihar, again you have to produce a set of different documents. There is no uniformity in this. And when there is no uniformity, it means the transit cost as well as time is going to increase. This is the reason you see a lot of queue when you enter any particular state. The reason is no uniformity is there. Different documents are there. Different documents, that is going to make the process complex. No transparency is there, going to increase or incentivize the corruption. So once this GST will come, there will be a uniform rate. Whatever, even if you want to traverse through MP, UP, or you want to traverse through Jharkhand or something, the rate will be same only. The same GST value will be there in all the states. That is known as the SGST. The value will be same. Whatever the value, it will be same only. Then we have the services. At present, on goods only we have this VAT, and majority of the services, although some services are there since 2004, but some services are still exempted. You don't have to pay any service tax. So on the manufacturing you are paying some tax, and on the service you don't have to pay any tax. It means you are incentivizing the investors or the companies to start their business in the service sector rather than manufacturing. Few critics are saying that this is also one of the reason, although there are n number of reasons, but this is also one of the reason that the manufacturing sector of India is not increasing and the service sector is booming because it is overtaxed. The government has overtaxed the manufacturing sector and liberalized the service sector. Then the exempted sectors. At present, there are a lot of exempted sectors on which you don't have to pay any VAT. These sectors, they are like the petroleum, and they are like the real estate. On this real estate, petroleum, all these are the exempted sectors. And maybe in few states you don't have to pay state VAT on this item, and maybe in few states you have to give some tax on this thing. The threshold is also different. Threshold in the sense, for example, you have to pay state VAT if the income of the company is more than 10 lakh rupees. Maybe in some other state you are exempted till 20 lakh rupees. So no uniformity is there. And the same company, in case of this company while producing has to pay either VAT or the service tax. Maybe the union government exemption for this particular thing is 5 lakh. So if up to 5 lakh rupees is the revenue of this company, you don't have to pay this service, or you don't have to pay any tax to the union government. Similarly, you don't have to pay any tax to the state government. This is state 1, this is state 2. But suppose the revenue of the company is 8 lakh rupees. So 8 lakh rupees you have to pay some tax to union government, but you don't have to pay any tax to these states. If your revenue is 12 lakh rupees, so you have to pay a tax to union government, you have to pay a tax to this state, but you don't have to pay a tax to this state. So no uniformity is there. Once this GST will come, there will be uniformity. If you are exempted from state tax, you are also exempted from union tax, because both the tax has been combined, and that tax is known as GST. So it is to improve or to simplify the process, to uniform the indirect taxation system. So Rangarajan just said that it is one of the biggest financial sector reforms of India. Then the historical glimpse. It is like the Asindas Gupta committee. In 2001, first of all, they recommended that there should be GST in India. After this, Kelkar committee was set up. They also recommended there should be GST. After this Kelkar committee, it was mentioned in the budget of 2007-8 as provisions that we are going to implement GST by 2010. So to implement by 2010, they created a committee of state finance ministers. In 2009, but by 2010 it was not successful. The 13th Finance Commission also recommended related to GST in 2010. Then in 2011, 115th Constitutional Amendment Act came. But this constitutional amendment, it lapsed because the Lok Sabha was. Then in 2015, 122 Constitutional Amendment came. Act means these are the bill. And now earlier the deadline was 2016 that it will be implemented by April 2016. The deadline has already been crossed. The reason is the present government don't have the majority in Rajya Sabha. And the opposition, they want some changes that we will discuss in the issues part. In the issues we will discuss what is the problem, what are the demands of the opposition which the present government is not able to fulfill. So this is what the historical glimpse from Asim Das Gupta committee of 2000-2001. Now we have reached in 2016. Even after 15 years, this particular reform has not yet been implemented. Then we will discuss the international examples. So roughly there are 140 countries in which there is GST or some system like GST, or they have VAT. Then we have the France was the first country. In 1954 they implemented this VAT system. So France was first. Then in few other countries, just like in France, there is 15% of the VAT. Then there is Germany, sorry, it's 20%. In Germany it is 19%. In Pakistan also there is a system like VAT. Then in few other countries, Sweden, there is 25%. In New Zealand it's 15%. So it's like in different countries, different rate of GST is there. Then in few countries there is uniform, just like in case of Singapore. The GST rate is same for goods as well as services. In countries like Canada, they have dual GST. Dual GST means union government also levies some tax and state government also levies some tax. In India also we have the dual GST system. Union government is going to levy CGST. State government is going to levy SGST. State GST and central GST. So this is what some international examples where GST has already been implemented. Then we will discuss the salient features. You can expect one question maybe in this year pre from this salient features, because GST is very much in news and no question has been asked yet. So the first feature is it is a destination based tax. Destination based means, again the same example, I think by the end of our economics classes I will transfer all the commodities from Maharashtra to Bihar. So suppose one company wants to sell the commodities from Maharashtra to Bihar. So destination based means at present what is the system? The existing system. So existing system, let's discuss here. Old system, and suppose this is the new system. Within state and outside state. If you want to sell the commodities within the state and if you want to sell the commodities outside the state. So this is the example of selling the commodities outside the state. So within the state, earlier what was the system? Union government was levying excise duty that you have to pay, plus the state government was levying VAT, value added tax. Once this system will be replaced by GST, there will be CGST which will be levied by union government and SGST which will be levied by the state government. Then in case of outside the state sale, like this, earlier what was the system? Excise duty, again union government, excise, or we can say SANVAT, it's one and the same thing, plus in case of interstate trade you have to pay central sales tax that we discussed. When you will cross the border, union government is levying some tax and that tax will be given to the Maharashtra government. So this CST will be there, plus VAT will be there. That VAT was being levied by the Bihar, because that item is being sold in the this thing Bihar also, plus this Maharashtra also was levying some VAT. So two VAT, or we can say VAT system was there. Once it will be over, so this CST was going to the source state. Once this thing will be over, IGST is going to be levied. So under IGST there will be two components, CGST and SGST. IGST is nothing but the mathematical addition of CGST and SGST. So if the value of CGST is 5 and SGST is 5, so the value of IGST is 10, 5 plus 5. But the component of SGST which will be collected by the union government, that will not go to Maharashtra, but that will go to the Bihar. So it will not be source based, it will be destination based. And when I am saying it is a destination based, there is lot of hue and cry from the manufacturing states. Maharashtra is there, Gujarat is there, Tamil Nadu is there. What they are saying? They are saying we are producing something, we are selling the items to the Bihar, but the tax which is being collected on our items, it will be given to the Bihar. That may increase the consumption, because if Bihar is there, Bihar knows that if the citizens, if the people of Bihar, they will consume more, so the Bihar government will get more revenue. So it is very much possible that Bihar government will incentivize the consumption. And as we are the developing country, consumption is not good for the developing country. So this is what this Tamil Nadu, Maharashtra, Gujarat, all these developed states or manufacturing based states, they are saying that this is our loss. Earlier we had this 1% or 2%, that is known as central sales tax. But now you are saying that central sales tax will be abolished. So you have to compensate our loss. Whatever loss we are getting, you have to compensate it. But the second perspective of this thing is, if Bihar government is getting the tax, so Bihar people, they will consume more. And when Bihar government is getting the tax, so they this Gujarat, Maharashtra, Tamil Nadu, when they are producing something and they are selling this thing. So when they will produce more, because they have to sell it, so when they will produce more, their economy is going to increase. When their economy is going to increase, it is going to increase the income of the citizens of these states, because you are producing something, and when you will produce, there will be expansion, their growth is going to increase. When their growth will increase, their income will increase, and when their income will increase, then they also will start consuming more, and when they will start consuming more, they will start getting the taxes which earlier was going to Bihar. So there are two different approaches, two different point of view for this destination based tax. These states, they are saying that it is a revenue loss to us, because earlier at CST and all, we were collecting these things, but once this will be there and GST is a destination based tax, there can be two types of taxation system. One is source based, second one is destination based. So GST will be destination based, under which the SGST component will go to Bihar and that will not go to Maharashtra. So these states are opposing it. But the other point of view, which is criticizing Tamil Nadu, Bihar, Gujarat, or all these states, they are saying if you will produce more, your growth will be there, your income will be there, increase. And when your income will increase, you will consume more. And when you will consume more, ultimately, you will get more taxes. So these are the two different approaches of destination based tax. Then it will be dual GST. Dual GST we discussed. Union government is going to levy some tax, as well as the state government, they are going to levy some tax. Union government tax will be known as CGST. State government tax will be known as SGST, because India is a federal country. So both both tiers of government, they want to levy the taxes. Then we have IGST. IGST is very interesting. Suppose again the same Maharashtra, let's transfer the stock to UP. earlier there was a system that was known as central sales tax, which we already discussed. Here union government will levy the tax and that will go to Maharashtra. But this CST was applicable only for sale and it was not applicable on transport or transfer of goods. So this was a legal loophole. The legal loophole was the companies, the big companies, they have created their warehouses. Suppose this company wants to sell the goods from Maharashtra to UP. So what they were saying, there is a transfer of stock, transfer of goods from our this warehouse to this warehouse. We don't want to sell it. So whenever there is transfer of stock was taking place, there was no funda of CST. So no central sales tax was being levied. And when there was no CST, so the final market price of the goods of this company, they were relatively less in comparison to the small companies. Suppose you have MSME. So MSME also, but MSME cannot afford to maintain warehouse in all these states. But a big company can afford. So this MSME was selling through the normal channel, and when you are selling through the normal channel, you have to pay CST, and when you have to pay CST, the final market price will be increased. So this existing system of CST, central sales tax, which was being misused by big companies by using this funda that is known as logistic warehousing concept. Because it was based on the sale of goods and it was not on the supply of goods. Once GST will come, what they said? They are saying no sale. It is based on the supply. If anything being supplied from one state to the second state, you have to pay IGST. And this IGST is nothing but the mathematical addition of CGST and SGST. Union government will keep the CGST and this UP, they will get the SGST component. So this is what the IGST. Then we have a lot of union government taxes, lot of union government indirect taxes. They will be subsumed, they will be amalgamated, they will go into GST. So which all taxes will go? First of all, there will be service. Then we have excise or we can say VAT. Then we have Article 268, excise duties on toilet and medical preparation. Then we have the cess and surcharge. Then we have the countervailing duty, CVD is there. Countervailing duty we already discussed. Suppose you want to import something. So first of all, there will be basic duty, basic custom duty. Then there will be countervailing duty to negate the subsidy given by some other government. In that taxation chapter we have discussed, or the loss of the excise duty. So to compensate these two things, CVD is being levied. Then the special additional duty for the loss of central sales tax. Then there will be, if required, anti-dumping. And finally there will be cess. So that countervailing duty of the union government, that will be subsumed by this thing. And which all things will be exempted? You will be shocked. Custom duty. Then we have cess on custom. Then we have petroleum. So all these things in petroleum, it will be decided by the GST council, that we will discuss later on. So custom duty will still be continued. So after GST will be implemented, there will be basic custom duty plus IGST will be there, plus if required, only if required, so anti-dumping plus cess. So why the government continued this custom duty? Because for any economy, to promote the domestic companies, you have to increase the prices of the imported goods, and this is one mechanism through which the government wants to increase the prices of the imported goods so that the domestic companies they can perform well, or there will be more consumption of the goods being produced by the domestic companies. So in case of the import of items, once GST will come, basic custom will be continued, plus IGST will be there, plus if required anti-dumping will be there, and cess on custom will be there. So these are the exceptions. Similarly, in case of state, so in case of state government, I'll discuss the exemption. First one is on electricity duty, which is being levied by the state. Then we have the petrol, and then alcohol or liquor for human consumption, only for human consumption. And then we have stamp duty on immovable property. So these things will be exempted. When I'm saying exempted, it does not mean they will be exempted throughout. Once GST will come, so GST council will decide, but only three taxes are there which will never come under GST. As per the present system, the act has not been passed by the Rajya Sabha. So as per the present system, there will never be any GST on alcohol or liquor for human consumption. That will still be outside the purview of the GST. So state government will continue to levy this, plus state government will continue to levy on this electricity duty, plus the third and the last thing is on the real estate. So real estate will be kept out of the purview of the GST. So GST will not be there for only three items. As of now, I am telling you, because it is still a bill, it has not been passed by the parliament, but as per the existing system, there will be exemption list from GST that will be for real estate, electricity and alcohol for human consumption. Except this, everything will come under GST. When it will come, that will be decided by the GST council, but of course that will come. So this, which of the following state taxes will come? All the state taxes, entertainment tax is there, luxury tax is there, taxes on this lottery and all is there. Then we have the sales tax or the VAT is there. Then all whatever the taxes that we have discussed, all that taxes will be subsumed, and that is why the states are against. What the states are saying? They are saying that the major tax collection of the union government is through the direct taxes, and the major tax collection of the state government, it is through indirect taxes. You are subsuming indirect taxes, but you are not touching the direct taxes. This is one critics, one issue between union government and the state government. Then we have on the imported items that we discussed. In case of imported items, it will be custom duty will be levied, IGST will be levied, then cess will be levied. Then exceptions. So we already discussed, these are the three exceptions: real estate, electricity duty and alcohol or liquor for human consumption. Then there will be common threshold. Now this is good. Common threshold means union government is going to levy CGST and state government is going to levy SGST. So suppose you have produced this item and the price is 100 rupees. So on this 100 rupees, union government will levy the tax. For example, it is 10%. So it will be 10 rupees. So the price becomes 110. At 110 you have to distribute. But when the state government will levy the SGST, that will not be on 110 rupees but on the same base. Same base means on this 100 rupees only. So the SGST will be 10% of 100 and it is not 110. So finally it will be 10 only. So the final price of the item is 120. Compare this 120 with this thing. At the starting I discussed union government is producing something finally and it was 121 because the base was different. The state government was levying tax on that 110 rupees and not on 100 rupees. Once GST will come, there will be same base. The base will be same. This is what we have. Then the common threshold. Common threshold means if the state is saying that if your revenue is less than 10 lakh rupees, you don't have to pay SGST. So that same 10 lakh will be applicable to CGST. If your revenue is less than 10 lakh rupees, you don't have to pay CGST as well. So finally the negotiations are going on. The states are saying that the threshold should be more. The CGST, the central government is saying the threshold should be optimum. So finally when the GST will come, so GST council will decide what will be the value of the threshold. But that threshold will be same either in case of CGST as well as in case of SGST. And then the last, one of the last feature is exports. So exports are zero rated. Zero rated means whenever you are exporting something, you don't have to pay any tax. Of course, the government can come up with some exceptions, just like suppose the demand of sugar has increased in the international market. So more and more sugar will be exported from India. So the supply of sugar in India will decrease, and when the supply will decrease, the prices will increase. So in that case, in that contingency situation, of course, government can levy some export duty, but otherwise exports will be zero rated. It's not like in case of import, custom will be there, IGST will be there, cess will be there, but in case of export, exports are zero rated. So these are the salient features of this thing. We also discussed the old system and the new system that we discussed. Earlier we had sale within the state and sale outside the state. So that was under this old system versus new system. And then the 122nd Constitutional Amendment Act came. Earlier also 115 Amendment Act came. Sorry, this is not an act, again it's a bill. So 122 Constitutional Amendment Bill. So the first feature is GST Council. GST Council will be a council of Union Finance Minister, State Minister of Finance of Union Government, and Finance Ministers of states. So it means there will be two representatives of union. First is Union Finance Minister, which will be the head of this council, and then the State Minister of Finance of Union, and then the Finance Ministers of states. So three bodies are there, three entities are there. The voting of union and finance, the share in voting of union and finance is 1/3, and the voting share of this finance minister is 2/3. So Union Finance Minister will be the head. But the good thing is, if you want to come out with a decision, so that decision will be implemented only and only if there is a 3/4 consensus. So it means alone union government cannot decide because they have only 1/3 voting share. Alone states they cannot decide. So that may improve the fiscal federalism, fiscal cooperative federalism, because to get this 3/4 of the votes, some of the states they have to come up with this union government. Now what the opposition is saying, we will discuss the issues. So one of the issue is the opposition is demanding that the share of union government should be 1/4 and the share of states it should be 3/4. This is one demand which the union government is, the present government is opposing and the opposition wants. Then when the GST Council will come into picture? So the article which is related to GST Council is 279A. What is 279? We discussed. Let's discuss the articles. So 279 is the net proceeds of taxes. What is 276? Professional tax. What is 275? Grants in aids on the recommendation of the Finance Commission. What is 292? It is the borrowings of the union government. Then what is 268? taxes levied by union government, collected and appropriated by the states. What is 271? It's surcharge. What is 265? Tax can be levied only by the authority of law, no taxation without representation. I think this is enough. So 279 will be there. As per 279A, GST Council will be established after 60 days of passing of this bill. So when this bill becomes an act, within 60 days, the President will set up this GST Council. And what will be the function of the GST? This will be the structure. And what will be the function of the GST Council? Some of the functions we discuss. They will decide the value of threshold. They will decide the exemptions. They will decide what special incentive should be given to the special category states, that 7th Northeast state plus 8 Sikkim plus Jammu and Kashmir, HP and Uttarakhand. So to all these states, they will give some incentives. Suppose some disaster comes. So if some disaster comes, what should be the value of CGST, SGST and all? In case of contingency situation, this GST Council will decide how to increase or decrease the value of CGST and SGST. Then few other functions is like, it will be the grievance redressal. If there is some redressal, some grievance, maybe of the state or maybe of the union, so that will be solved by this GST Council. Now this is the second issue which is between the present government and the opposition. What the opposition is saying, देखो यार, simple है. The grievance is because of the decision of the GST Council, and whoever you have grievances against this body, and this body again is going to solve it. So it is a violation of principle of natural justice. So the opposition, they are demanding there should be a separate body for grievance redressal. It should not be like the same body will take place, or the same body should handle the grievance redressal mechanism. Then few more functions or few more functions of GST Council is GST Council will decide how to distribute the IGST. CGST में कितना जाएगा, SGST में कितना जाएगा. All these things will also be decided by the GST Council. So these are the major functions of the GST Council. Then the constitutional changes. Once GST will come, GST is going to amend more than dozen of the constitutional articles. But few major amendments, they are like 246A. We discussed union government can levy the taxes on production and state government can levy the taxes on the distribution only. 246A will be amended, and states, they will get the power to levy taxes on production as well as the distribution. Then we have 269A. All these other articles like 268, all this they will be removed. 269A, under 269A there will be IGST, a new type of tax will come. Then 270 will be amended. Under 270, CGST will be added, because CGST will become whatever the tax being collected under CGST, that will be shared, that should come under the central pool of taxes, and some amount of this along with the personal income tax, corporate income tax, all these things, they will become the central pool of taxes. Right now we have custom, excise, service and all. So because excise, service and all that has been replaced by CGST, so CGST will come here and that will be shared with the states on the recommendation of the Finance Commission. So new tax CGST will be added, others will be removed. Then there will be 279A that we discussed, that is GST Council will come. And then the problem of CST, Central Sales Tax, the third one is that these states, they are saying, again we will shift this marker from Maharashtra to Bihar. Central sales tax is a tax which is being given to Maharashtra by the union government. What Maharashtra government is saying, once GST will come, this CST will be removed. So when CST will be removed, we need compensation. So union government is saying we will compensate you. This GST council will decide that whatever will be the value of the GST. For example, the rate of GST is 20%. I am just giving you the example. 20%, one extra percent will be levied for 1 year or 2 year, that can be extended by the GST council. The purpose of this 1% will go to the source state to compensate the loss, because the states, these manufactured states, these states, they are not trusting the union government. What they are saying is, whatever will be the value, or that we will discuss in under the issue, the issues or the concerns. Back to this thing, the CST, what is the provision? 1% extra will be levied, that will be added to the rate of the GST, and that 1% will go to the source state, and that will not go to the destination state, just to compensate the loss for some time, and whether to extend it or not, that will be decided by the GST council. Then the next topic, that is the issues and the concerns. The first one is the parliament. In case of parliament, in Lok Sabha, the present government is having the NDA government is having the majority. In Rajya Sabha, they don't have the majority. So from Lok Sabha, it has been passed. From Rajya Sabha, it has not been passed. So this is one issue. Then we have something that is known as revenue neutral rate. Revenue neutral rate means your revenue should be neutral. It means whatever your old system and whatever your new system, the tax collection should be same. Earlier system, and the revenue neutral rate assumes that I don't care about the transparency, the long term and all these things, your revenue should be same. Old system, suppose there was service tax on some service, present value is 15%. When you want to sell that service, you have to pay the state VAT, for example, it is 10%. Then some sales surcharge and all these things. So roughly it was 25-26%. So now the issue is, few economists, they are demanding the new VAT should be, the new GST rate should be 25 or 26%. Although the 13th Finance Commission recommended the rate should be 12%. Then there was a parliamentary committee which said it should be 25-26%. Recently, the Rangarajan committee which was set up, they said divide the articles into these types, and roughly they said it should be 17-18%. So different views are there related to this rate of GST, because what they are saying, if the rate of GST will be high, again the laughing curve will come into picture. People will start avoiding and evading the taxes. So it should be optimum only, and it is a transparent thing. So when you are implementing a transparent system, we discussed when VAT came, so excise tax collection was 24 rupees. When VAT came, it was only 8 rupees, but still that mod VAT was highly successful thing. Under that new thing, few economists are saying the base should be less, the rate should be less, so that more and more participation will be there. The tax base is going to increase. Anyways, right now we don't know what will be the value of the GST rate. Then the infrastructure. We discussed, to implement this GST, you need infrastructure, and few states, they don't have the infrastructure. So the union government has started a company, GST and GST network, in 2013. And what was the role of this GST and new private limited company? It was to create the infrastructure in the states. Then the compensation to the states. What states are demanding? The states are demanding that whatever you want to compensate, mention in the GST bill only, because they don't trust the union government. And why they don't trust? Because that CST was there. Earlier the value of CST was 4%. Union government unilaterally decreased it to 2%. Although that 4% was not coming to the union government, but still, without even consulting the states, because this tax is being levied by union government, so they decrease it to 2% only. That is why the states, they are saying, we don't want promises, we want commitment. So whatever you are saying, just mention, just put that particular value in this GST bill only, so that it becomes a constitutional amendment, because here it was an executive order or just by the 51%. Just by normal majority, the government has decreased it from 4% to 2%. And this full money was going to the state. So this who was getting affected, union government has not even consulted the states. So compensation to states, states are saying it should be mentioned in the GST bill itself. Then the threshold, the union government is saying the threshold should be more or less, the state government they are saying it should be more or less. Then the exemptions, the states they are demanding the exemption list should be big, because in few states, just like alcohol or the petroleum, the state of Assam, 40% of the tax what Assam government is collecting comes through petroleum. But once this GST will come, so this Assam government will only get the SGST, because that will be subsumed. So the states are demanding a big list of exemptions. But if the list of exemption will be big, then there is no purpose of GST. So that there is still an issue or concern, a discussion between union government and state government with respect to exemptions. And yeah, one more thing, tobacco. Taxes on tobacco. Under this thing, this tobacco and all cigarette, they are regarded as sin goods. Sin goods means the union government wants to decrease the consumption of these goods. And how to decrease the consumption? Increase the prices. How to increase the prices? Increase the taxes. How? So in case of tobacco and all, there will be excise duty will be levied as well as GST will be levied. So both will be applicable in case of tobacco. Then we have the final conclusion of GST. So the conclusion of GST is a major change in the existing financial structure of India. Then when GST will be implemented, the price of the final goods, that is going to decrease. And when the price of the final goods will decrease, that is going to decrease the inflation. In case of economics, whenever you are understanding from pre-perspective, objective exam perspective, and whenever you are understanding the concepts from the mains perspective or subjective perspective, the thing is, increase the scope, try to relate the things, not only of economics, try to relate the things of history, try to relate the things of polity. All these things should be interrelated. So whenever this GST will come, and when I'm saying the prices will decrease, so first is price will decrease, and when price will decrease, it means inflation will decrease. When I'm saying inflation will decrease, it means the interest rate in the economy, that will decrease. Interest rate will decrease, so infrastructure development or the investment will increase. When I'm saying price is decreasing, it means our competitiveness in the international market is going to increase. Just relate all these concepts. So that if in the mains the question comes while concluding this particular GST, just add all these different views. Just in one line you can put it. That's once GST will be there, is going to decrease the prices, comma, inflation will be decreased, comma, interest rate in the economy will be decreased, comma, investment will increase, and all these things. Just try to relate different concepts. And GST will increase the transparency of the system. All the indirect taxes will be amalgamated, unify. So all these things you have to mention in the conclusion. So this is what we have, the public finance unit. So thanks a lot.